All right, guys, let's get started. Folks can keep joining in, but thank you so much again. Like I said, joining in on a Saturday afternoon. We have a fun conversation lined up. I am specifically very, very excited about this conversation for two reasons. One, I have been a power user of Tracxn for a very long time. And second, super, super inspiring to see a female founder kind of take this all the way to the IPO in a market that's been as dull as we all know. So super interested to hear how Neha has built Tracxn. Company that's built from India for the world. They have customers in 58 plus countries and recently went IPO. Before we get started, I want to take a moment to kind of introduce myself. My name is Mona, and I'm the founder at Upraised. At Upraised, we are a career transition platform. So if you are somebody who is in the early years of wanting to transition into product management or transitioning from like an APM to a PM or a senior PM role, that's what we do. We help you. We have a 16-week upskilling program, and it's very structured. The unique thing about Upraised is we don't end at a certificate. We actually take you to the job. And if you think about that, basically what that means is it enforces us to work backwards from what the job requires to what we teach in the program, because the finish line for us is actually helping you get to the job. So that's what we do. As part of that, we run a series called the Upraised PM series, and the idea here is how can we spend an hour over the weekend to kind of instill more product thinking across our Indian ecosystem. A lot of the products today, at least traditionally 2 to 3 years ago, we were sort of service heavy country. We focused on building products that just provided services rather than experiences and intelligence. And that's what we want to, that's our primary goal. We bring thought leaders from the country to talk a little bit about their product thinking and help other people inspire on how they can think product first rather than just, human bodies first, right? Not every problem needs to be solved by just putting human bodies to work. So as a part of that, super excited to have Neha Singh. She's a co-founder and CEO at Tracxn. For those of you, it'll be shocking if you guys don't know what Tracxn is, but if I had to use a one-liner for Tracxn, it's basically a Bloomberg for private companies, as she likes to say. And so you can think about this, for the public markets, people use the Bloomberg terminal to gain insights, to gain intelligence on the upcoming stocks, to study stocks that are interesting, find the hidden gems. That's what Tracxn does too. Tracxn coined this very interesting term. It's called Soonicorns. And we are super, these are all companies that are on the verge of becoming unicorns. And we'll talk a little bit more about the journey with Neha, but welcome. Really appreciate you spending your Saturday. Guys, Tracxn recently went IPO. As you can imagine, this is in itself a unicorn event, because we've had a pretty dry IPO market for a very, very long time, primarily because of all the macro conditions. But yeah, here she is. I'm super excited to dig into the journey, get to know a little bit more, and sort of think more on how where did the idea come from, how did you build on it. So maybe we can start a little bit on the early days. How did you bump into the idea?
Sure. Thanks, Sona. Firstly, great to be here and great to be speaking. So a brief background: before Tracxn, I was an investor in Sequoia Capital, broadly investing in the technology space, and essentially I'm a comp science undergrad.
Yeah.
So when you were investors, you realize that there's so much of like, if you look at obviously the public market folks, they have the luxury of having platforms, but in private markets, actually, this was a decade back, and you had to build all the information yourself. For instance, if you're looking at any sector, like today you're looking at T2C brands, or you're looking at some productivity tools, right? You literally have to like go to Google, search for companies, do that, find out, and it was a lot of manual work. And as comp science undergrad, you realize that ideally technology should help you make your job easier, so that you are spending lesser time in collating data and then more time in doing the next level of analysis. So that was the the birth of Tracxn. This was essentially, a productivity platform that we really wished existed when we were investors. And my co-founder has a similar background. He's a comp science undergrad from IIT Kanpur, and then he had worked with Accel Partners. And both of us actually independently came up with this idea that, there has to be like a platform to help investors, do that job more efficiently. And this was actually, interestingly, when we started, the term unicorn did not exist.
Correct.
So this was still in the early days of private markets when, I think the total number of companies that crossed $1 billion in valuation, now popularly known as unicorn, was probably just two globally. And last year that number was 500. So obviously, even that time we thought that, the market is fairly deep, and there's a lot of impact that is getting created. If you look at the companies in the startup ecosystem, but there's so much information asymmetry that founders are looking for investors. Investors are spending their energy finding companies. There has to be a more efficient way to do that. So that was the genesis of how Tracxn got started.
Fantastic. How did you, what was the vision always to build it for the world, or was it mostly focused on starting with a specific geography?
Yeah, so that's an interesting question. So I think as investors, in our previous avatar, that was one of the things that when you were starting the company, you were also evaluating, how big is this market, etc. So that was clear that it has to be a global platform. It cannot be a local platform. It has to be a global from day one. And interestingly, we also launched US first. So I was doing my MBA in Stanford, and that is where we started between my first and the second year. This was 2013. And we also got incubated in Lightspeed, which is a program that they have with Stanford and Harvard and a few universities, wherein they actually give you money without any equity. And the other interesting thing is that you also get to work with their partners. So we actually worked with their initial partners, all the initial sectors that we launched. So for instance, at that time, cybersecurity has been one sector which people in US, at least investors, look at very closely, or Internet of Things. Right. So all these sectors we actually started off with, and so one thing was clear, that it is a global first platform, and second, we actually launched US first. So not a lot of people think that we actually launched India and then we did that. So I think the other interesting thing is that you launch with your largest market, which essentially has the potential to be your largest market, in years to come. But working with the customers over there is probably most important when you are starting your journey.
Yeah. So when, I read a little bit about this, that you got incubated at Stanford and you were working while you were doing your MBA. How were you able to sort of get your first paid customer? Like, what was that journey?
Yeah. No, so that is the most interesting part. Actually, in our space, I think our product was a little bit of greenfield. What that means is that it was not like, I'm going and selling you CRM, which, where there is already a product. So it's very easy that, you can either say it's cheaper or you can say it's better product, better features. So in their case, you actually had to figure out, okay, what is the pricing that should be. So we actually worked with an initial set of customers, and this budget, what people pay us today, this was non-existent. People were doing their sort of things internally. Think about what Bloomberg was like 40 years back, wherein people were standardizing the financials of public companies internally, or the investment banks, and then there came a standard platform. So it was that a few years back. And I think the first interesting thing is that, what should be the product, what should be the pricing. So we actually work with the initial set of customers, and then asking them, what is the problem that you will pay like $1 million over time for that. And then we realized, okay, sector-based coverage, and this is sort of one wedge to enter this market into. And then we worked with them to figure out, okay, what should be the pricing. And we actually launched the pricing from $100 a month to $5,000 a month. And, 5,000 was obviously much more curated, and $100 was very automated, right? And the buyers that we actually got is for $5,000 a month product. So we actually started off with the $5,000 a month.
Wow, that's super interesting.
Yeah, and I think the best part, that you have some initial from like idea to one data to paying customer. I think getting the first initial set of paying customer, that's a very interesting journey. And obviously, US founders have to do the initial sales. So we actually sold, initial customers, which is VC fund and a corporate. So 3 customers we sold at $5,000 a month. So, and now obviously we are at, close to say $500 a month or $600 a month, which is, it has also evolved. But I think that was the interesting part that, so we worked with the customer for about 2 months. And then once we thought that there is value that is, that they are deriving, then we started, the paid project with them, or like the paid subscription with them.
Yeah, that's very fascinating that you started with a $5,000 a month product. Can you talk a little bit about sort of, the journey? Like a lot of people think that, most people think that it's like people end up spending 3, 4, 5 years on a startup, and then it gets to some level of traction. They keep raising money. There's venture funding, and sort of you kind of grow from there and become a unicorn in the 4 or 5, 6 years, something like that, right? You had a journey over 9ish, 10ish years, right? How did you have conviction to stick to it? And you've also not raised a lot of venture funding. So there are many unique things about the Tracxn story which are very interesting. First, it's a product that's been built with a lot of love over a long period of time. It has not raised a lot of venture funding. It is profitable. Went IPO in a market that was super dull. Like, how have so many unicorn events happened to you?
So I think probably a little bit to the benefit of what we had seen, in companies when we were, on the other side when we were investors, and we had the benefit of seeing the whole life cycle of, probably companies initially. So one was obviously, I think I've seen. So one is, just sticking to the problem through the ups and downs. I think that's one of the key things. I have, some people actually do it. Like some founders start because they want to do a startup, or some founders do that because there's a problem that needs to be this thing. So I think I fall in the latter bucket. And I think you had a vision of the market, which was, so that probably keeps you, very much heads down and excited that, there were obviously in the startup, there is ups and downs, which is going to happen. But, overall, this is a very interesting market, and you would want to continue to, sort of build that. I think that is one of the key things that keeps you sort of heads down, throughout the ups and downs. And I think on the second part, which is, building the company. So I think we, thanks to that, we had some of the advisors in US, as well as what we had seen is obviously, you build the company. If you raise a venture capital, then you can either do an M&A or you can do an IPO. Technically, there are only 2 paths, which is there. Right? You can obviously build a bootstrap company like Zoho, which is, also amazing way to do that. But obviously in our case, you have to like build, we are sort of more desperate to get the initial, to sort of put in resources in the initial year. So you chose the venture capital route. And over there, you have the 2 routes, you either build for M&A or you build for IPO. You can actually do like a, PE buying out the VC, but essentially it's the same cycle. You either, do one of these 2, choose one of these 2 things. And if you are building for, IPO, then obviously a few things you have to be sort of, you have to take decisions for a little bit longer term, because, like essentially you're running the company for another 3 decades after IPO also. It's a beginning of a journey. So I think that those were some of the calls that we had taken earlier on, which is, in product or in a lot of other things, which is a little bit longer calls. That you took while building it, so that one is, you can continue to build this for decades, and the other thing is that obviously you build it sort of obviously towards profitability. So profitability in our case was more of a not an input, but more an output, because in general when you're working with enterprises, I think it's probably more easier to become profitable than I would say than like if you have a higher ticket size versus when you're working with consumers, I would say.
Got it. How did you resist the temptation of raising more venture capital? I feel especially in the 2015 to 2017 phase, where I think one kind of raised the millions and the bajillions and the gazillions. How did you resist that temptation?
So thankfully we had turned profitable. So that was, I think, one very interesting thing that happened. So which did not require us to raise a lot of money. And so, I think, if you look at it, actually we turned profitable before our Series A. And then we raised our Series A. Obviously, we invested a lot in the whole infrastructure. And then we again turned profitable about 2 years back. So that is when we actually started the IPO process. So for us, it was more like, that Indian markets typically like profitable stories. So we had actually, that's what we knew earlier. Obviously, that it has, like last year, so a lot of other companies as well. But that was the initial impression that we had when we started off with. Whenever you turn profitable, you can start the process. So that's how we actually started off with. So thankfully for our case, I think we just, it turned profitable earlier.
Yeah, so and I want to harp onto that a little bit, because that I think is also one of the unique things, especially since you started in the Bay Area, US was your market, primary market, and then you kind of grew from there, right? I worked at Airbnb before this for 7 years. The general sort of sentiment is, once you have venture round, there are metrics to be met, and there are, growth at all cost and all these kind of things. How, maybe you can tell us a little bit about, maybe it's the investors you picked, or maybe it's the process you ran. Like, you had venture funding. How did you incorporate discipline to get to profitability?
Right. So that is a little bit of a DNA that you have to sort of instill, that you are not looking at that you're looking at sort of a longer term sort of metrics. I think that's just, you can do either way. So sometimes, for instance, like you can launch, like when you're building a product, you can launch country by country, or you can build globally. So for globally, it will be, initial 1 year will be slightly slower, but obviously the third year will be much faster. So then that's a trade-off that you have to sort of take. So I think that was some of the key things that we probably took early on, because we thought, we knew this is probably, one of the parts which is there. But I think it is just it's just probably a function of you being on the other side as well, and you having, sort of seen investors. So if you are able to work with your initial set of investors and keep them in confidence about, what you're doing, I think then that is easier. But yes, obviously that is, there's a little bit of temptation that happens at everything.
Yeah. And I think, more often than not, it's those moments of temptations when you make these calls that have significant change in the direction of where the company goes, right? Like, you decide to take a funding at an increased valuation, then you have to live up to those growth numbers. Then it's like it's a treadmill, right? Like, you can't ever get off.
Right. No, that is true. Yeah.
So tell me a little bit about sort of, you said very early you had two paths to take, right? You could go down the M&A route, or you go down the IPO path. What are some things that you thought about that built that conviction that I want to go the IPO path?
Right. So it is so it's a little bit of a punt, I would say, in hindsight. Obviously, we had not imagined that, it'll happen. It is more of a, something maybe in the 15th year or so of your journey, maybe it'll happen. So obviously it was a little bit of a punt. It was not that you were very sure, now in hindsight, you can obviously say that.
Yeah.
But, at that time you're taking a little bit of a call. But I think, so we also had the benefit of having some of the angel investors and mentors in US who had seen a lot of this journey. So actually, interestingly, in India, actually, the number of IPOs that have happened is fairly limited, I would say, in the tech space. And in US, obviously, they've seen this playbook play out multiple times. So I think that was the other thing that that we also benefited from. We had got some angels and mentors in US who have been on the boards of companies, who have seen both of that play out. And they were probably one of the things that they gave us sort of clarity that this is what you do that. Because if you keep I think like if you keep raising, then basically it keeps delaying, for instance, your IPO plans by a couple of years. So I think that clarity, probably they had seen this playbook play out a lot more, and that is why we got benefited from sort of having those as mentors.
But isn't there like a short-term, long-term conflict situation? For example, I remember
Right.
that at
Right.
Airbnb, for example, because we were able to constantly raise money in the private market at a valuation that was parallel to our growth trajectory. Uh, there was always this conversation on why go public, because it limits your innovation, you're under scrutiny, you have a lot of regulators, you have to think of many other aspects. You can't take calls, then you can't experiment as quickly, you can't go into new markets, or you can't launch new products. There is market sentiment that you have to kind of control, right?
Right.
uh, so what was the balance for you?
Right. So interestingly, I also had this impression initially that public markets will be very much quarter to quarter driven,
Yeah.
and obviously private markets are more long term, and they will be talking about what's the numbers in the next quarter. Is this going to be there? I think that has changed after meeting some of the investors. So for instance, in our case, the investors are your typical very respected sort of mutual funds which we got as anchors. And investors in the public market. Interestingly, their questions were also very long term. That how is the next 5 years going to be, or how or what is the vision, or what are the areas that you guys are planning to go to. And so I think that has probably changed. After meeting a lot of these investors. Maybe obviously there might be some difference in US because it's a very competitive. I would say there are the highs of the companies are very in terms of the valuation, the highs and the lows is a lot. Like if you look at Indian market YTD, it is still actually in the green.
Mm,
Right, versus if you look at Nasdaq, it is 20% plus down,
yes.
20-30% down. So I think that those swings are probably higher. I think
Yes.
here it's more optimistic. I would say so, in a sense that I think I was pleasantly surprised at the questions of also the public market investors, which I
Hmm.
thought are also fairly long term.
Fantastic. Maybe we'll go back a little bit in time. How, there are lots of folks here who are interested in the B2B space, for example, right, whose customers are not direct consumers. You found a very interesting segment. I don't know if you can call it a B2B, because the VC world is not really like a B2B kind of, but traditionally you can maybe bucket them in that category. How did you think about product market fit? When did you know that this is the idea I want to like go deep in?
Right. So that is a little, yeah, that's a little bit of a difficult job, I would say, in the initial 1 or 2 years. And, the founders have to obviously spend a lot of disproportionate time in doing that, having working with the initial customers. I would say when you have the initial set of customers who are willing to pay,
Mm,
and when you think that someone else can also sell in your team apart from you, I think that is when is a good testimony to the fact that there is a good product market fit.
mm.
That
Somebody else can sell on your team. Okay, that's interesting.
Yes, yeah. So initial sales, obviously, you working with the customers. You are doing as you are launching, or either you're launching a new product, you're working as a product manager, or as the core team member. But once someone else in the sales team can do that, I think that is then, and they are able to sell, without having to, obviously, because the product manager or the founder does a very concept selling.
Mm,
But a sales team, can do a little bit of concept selling, but more, output selling, that what
mm,
are the customers going to get the next day. So
mm.
I think once that starts happening, then that's a good proof that, the product market fit has arrived.
It's an interesting point. And let's say now you have initial PMF, you have like 10 paying customers or maybe 20 paying customers. You feel like, okay, now there is a little bit of traction there. In that side of the world, on the consumer side, you basically, it's very, the iteration cycle of launching something, getting feedback and iterating is much faster. How does that happen on the B2B side? Like, how do you evolve product, and how do you make sure that this is in line with what the customer wants?
Right. So in B2B, I would say the customers are very vocal,
Because they're
much more.
paying.
Yes, and they're paying, and they feel that, that they need one module and that should be implemented. So I think that is, one interesting thing that, so I think in B2B, you have to take a call of how much customization you need to do. One is that,
that was going to be my
because
second question. How do you prioritize?
right,
Let's say there's 5 customers
exactly.
and I have 4 different requests. Which one goes first?
Right, exactly. So so one good thing is obviously have a big ear, which is, or a function which constantly takes feedback from customers, because that really defines your product, roadmap. So that has been one. So for instance, we have one or two services wherein customers can basically send us anything, or send us a query, send us any request, anything that we have made it very easy. So that is one thing, essential. The second thing is prioritizing features. So that you have to be like very disciplined about, because you can either go more deeper into one customer segment, or you can like execute one module very well for multiple customer segments, right? So I think in B2B, one thing is very clear key. There's always be some of the things, can you do a little bit of services component and increase your ASP versus keeping it productized. To give you a simple example, like someone who's saying that I want an outsource analyst, that's a service that people are willing to pay like $6,000, $7,000, right? Versus modularizing one particular one, right? So obviously the first thing is very interesting, that you can have some services element, some on top of element, which increases their ASP, which gets you initial set of customers, but then obviously it's lesser productized. So I think that is one. I think the second thing rule is that always, at least if you're a product company, you should always choose the latter path. Don't fall into the temptation of the first one.
Yes.
You can work with some of the agencies probably who can help with the implementation, but you yourself doing it, I think just stay away from the temptation. Just keep whatever data modules that they need, keep making it more modular. So that is one, I think that's probably the second thing I would say is very important when you're working with B2B customers, because there is always a push on one side, the other side, can you give me this or that. I think just the third thing is basically probably have your own internal priority as well, because customers will definitely have like 20 different things to do that, but will they be willing to pay for that? So that's the question, right? So you should always obviously prioritize the modules for which the payability is higher, versus which another module which is a very red ocean module, wherein you have a lot of modules wherein it will be a price competitive. So whenever a person asks me, then I ask us, okay, for this module, so obviously it looks very interesting, both of them, they give you two ideas, it looks very interesting, then you can basically ask the customer, okay, for that will you pay me like $1,000, or will you pay me like $50, right? So the answer sometimes is very clear. Like for a workflow, maybe I'll not pay more than $50, because I'm used to paying, like for like a Gmail or a kind of productivity tool, only this much, right? But versus for something else, can I pay like $1,000? So obviously you should, the third thing is probably asking this question to the customer, because everything looks very interesting, but entering it from the more higher price point, that is perhaps easier.
Got it. Understood. Can you tell me one feature that you were just like pleasantly surprised at the adoption? You didn't expect it to take off as much, and it actually did. What was one?
So I think we were pleasantly surprised at the customer segments that we got. So initially we started with private market as the customer segment, but we actually corporates is equally large for us today. So and corporates, a lot of this. So when we were starting, people were saying that corporates also have this use case, etc. But we obviously did not have the first-hand experience of seeing what that means. But I think just having a good channel of organically acquiring customers, I think that is important. So then now, for instance, corporate is like equally large for us.
What do corporates use you for?
Like, so their corp dev team. So we work with two teams: corp dev team, innovation teams. Corp dev team essentially uses it for their M&A, targets, scouting different markets. And innovation teams essentially uses for product discovery. That if you want to look at, employee engagement tools, or banks want to look at all the partners that they can partner with, so they discover the solution.
And so you said now, obviously, because just sheer volume, corporates are more than VC firms.
Yeah, they're equally large, I would say. So I think that is one interesting thing, that once you launch a product, you will probably have your core customers, plus you'll also have a lot of other customers. So just keep acquiring them, and then once they become a sizable portion of your customer segment, then you can go more deeper into what they require more.
What was one thing that you were surprised didn't work? You had high conviction and you were like, damn, why is this not working?
So I think, yes, probably. Yeah, I think one thing is we realized that there were some features which required you to work with regulators also a little bit on the private market, which you cannot launch global first.
No.
So I think that is one call that we had taken, that we obviously we tried out everything, and then we afterwards took a call that you have to do everything which is global first. So you
Mm,
cannot just if you launch a particular thing which requires regulatory oversight and you have to take permissions, you have to work with lawyers across every country, then that launch process becomes very slow.
mm.
So I think that is probably one call wherein you spend some time and then you realize that you have to stay into the modules wherein you can launch global first.
Got it. How are you as a company organized, right? Because you're servicing like many markets. You're right now based out of Bangalore. Like, how does this operate?
Yeah, no, that's an interesting question. So our entire, I would say, platform team is not organized by region. It's actually the entire thing is global. So someone who's covering a particular sector, that team covers sectors globally, and the entire tech stack, everything is sort of global first. Like the entire when you are mining information about companies, your digital footprint, etc.,
Mm,
everything is irrespective of the geography that is
mm,
there. So your entire stack, I would say, of tech as well as your data is global first, and then the region wise comes in your go to market teams. So when
mm,
you have the different go to market teams, then because of the fact that they have to work across different time zones, then you have the bifurcation over there. When
mm.
someone is working with North America, someone is working with Japan, they have to work at different time shifts. So that is the GTM team is the only team where the bifurcation by region sort of comes in. Rest everything else, you try to do
Central.
holistically, like once,
Yeah.
once for all the regions.
Got it. Got it. Um, what is, many folks have described that the culture at Tracxn is very unique because, there are many long-term players. Like you've always kind of thought like profitability is in your DNA. You build for a very niche audience, right? For so to say, like VCs are, a species of their own, and corporates now. How would you define the culture at Tracxn? Like, what is unique about the culture at Tracxn? What makes it so?
That's yeah, no, yeah, no, that's a very interesting question. So I think a couple of things stand out. So one is, we there's one thing that we constantly say is it's a marathon, not a sprint.
Yes.
So it's not that you are it's a short spurts, and then you have to sort of consistently keep delivering it for longer term. That is one. The second thing I would say that it has been difficult, but we have been able to crack is your working time.
Mm,
So we typically have a very people can start their day, start and end, and hardly any spillover which happens. I think that is something that it took us probably like 3 or 4 years to reach there with defining like how the meetings are done, etc. Everything. But that is something that we've been able to reach. That you start a day, you have set of meetings. So everyone has this time boxing concept internally, wherein they
mm,
know, okay, this is the time that they are going to spend for this much. Like if someone is working with two different departments or looking at like three different products, and they would be having time allocated to each of
mm,
them.
mm,
That can change, maybe like if you decide to change the priorities, but once you fix that, you have the time defined, and then a lot of that happens. So your time boxing is probably one thing which we've been able to sort of achieve after quite some years, which just reduces the spillover which is there outside office hours or otherwise. So I think that I would say is the second interesting thing in the whole working
mm.
arrangement of people that is there. But apart from that, I think like obviously being a very flat organization, that is something that we obviously strive
Yeah, when you
towards.
said you only have 800 people, that is amazing for a company your size and for the kind of the quality of the product there is. Like it's very, very interesting. Also very, very interesting, given that you service a global market. It's incredible, like to do that with
Right.
that much.
Right.
So
I think one thing which is interesting to add, one thing which I think which has changed also, that I think there are a lot of good products coming out of India, which has
Yes.
changed. So earlier, if you look at it, like in the initial 4 years, I obviously spent in the Bay Area. And for the next, I would say 3 years, my location was still Palo Alto. Because, when you're selling to a global customer base, you thought that, maybe that should not be a point of differentiation because you also work with a lot of Fortune 500, etc. customers, right? So that should not be. I think that has changed right now. So I think that is, pleasantly that, people are fine with, people are used to seeing good quality products also coming out of India. So, I think now, even if you say that, okay, your sales team is based here, or the person who's speaking to you, is based there, I think people are very, even like the large corporates are sort of fairly, positive about that. So I think that is one pleasant thing that I've seen over the last decade that has changed. Obviously, thanks to the success of a lot of the SaaS companies, like Freshworks or like a lot of other global SaaS companies which have built sort of great products.
Did you find that ever to be a challenge in your initial years that, you're going to be, or in the initial years were you just based out of Palo Alto?
Yeah, so initial years, so you just are based over there. But yes, I would say, so it was never a challenge. But for instance, you work with so there are two segments, right? Like you work with PVC who are just used to looking at only US based companies, right? Their primary investment mandate is like just look at US companies, right? And the second thing is that you're also working with Fortune 500. Right. Interestingly, a couple of the Fortune 500 ones that we worked with, like, they also had the mandate that the person, this was obviously because they were also into government. But if you're working with governments, right, they also have this mandate that the person who is actually like the contract that they have to do, it has to be local contract. So there was also this requirement, initially there. So I think, yes. So I think, so we weren't sure, probably how that will be there, because the customer segments are, sort of used to seeing, more local one. But I think that has pleasantly changed. So right now, even when we are working with a lot of government agencies, or, we are doing contracts in local languages, like in Germany, I do contract in German language. Because the corporates are used to just working over there. So, but they are fine with, with entering into, or like working with a team who's like the entire setup is actually based out of India.
Got it. Did you ever find it challenging to be a woman founder over the years?
Right. No. So thankfully, nothing like that. I think there were a couple of things that people typically wonder about, whether how difficult it is. One is basically to raise money.
Yes.
So obviously the number of VC partners, like female partners, if you see, it's even lesser than perhaps the percentage of female founders is there. But thankfully, I think that is fairly, I would say, unbiased, at least based on the experience which is there. I think the second thing is probably doing sales to to the segment, which is again, the number of females is very less in the segment, right? There, I would say, I did not see much of a, thankfully, a difference. We also had a team in US initially, who can actually sell to the US customers. We did that. Then we realized, after we had a core set of customers which are sort of referenceable, then obviously we did not find that as a hitch, but we did have like a local team, to begin with, because we weren't sure what is the preference of, like whether the sales can be done remotely or not. So the sales is probably, I think, the second thing. Thankfully, nothing like that. I think the third thing I would say, just the hiring. There aren't a lot of, I think now it has changed, but, when you're initial, when you are starting your journey, 10 years back, when you're not funded, and you are asking people to leave their job to join you, obviously sometimes it's a difficult job, that it's a difficult question that you have to take a salary cut, and you have to join for stock options, and so just having seen a lot of successful examples of female founders, I think that has helped. But that is relevant only in the initial couple of years, which I think it's a little difficult, wherein you are hiring your initial sort of team, and you're asking people to leave their sort of stable jobs.
Yeah, so I was going to ask you, what is, how did you put this amazing team of, let's say, the first 100 folks, right? What was the process you followed to make sure that you got the best people on the team?
Right. No, that is very, I think that's something that, that's very important. So I think one of the things that really worked well when you are hiring initial set of people. So the initial set of people, all that everyone that we hired were from the network. So what I did was basically maintain the sheet of like, you ask your good friends, like people that you respect across all domains, right? And then you ask them what is the best, like uh, uh, three people that they have worked with. And you ask like 15 people the same question, right? And after this you will start having one person who got recommended by like 3 or 4 people, right? So I think that that way really works. So that's a very interesting way, to sort of mine the network. But just ask them, okay, who are the best people that they have worked with, irrespective of whether they are interested in this or not. So now when you have a list of people which are which have been recommended highly, then you basically go and meet them, and then it's not about thinking about how good they are, because you already know that they are good, but it's more around whether this is exciting enough for them or not. So I think that is an interesting hack that actually someone told me, and I sort of incorporated that also in the initial hiring of the team. And once obviously you cross the initial core team, then you have to sort of scale the process. Then obviously then it's a more skill based hiring, that for whatever skills that you need, you basically hire people there, and then you obviously have a sort of a good sort of trajectory that anyone who's performing good should be able to sort of grow into the system very fast. So I would say 2 ways it changes in the initial years and the later years.
Yeah, but for the people, like you said, when you lay out in your network and you ask who are the great people you work with, they typically you obviously identify some hidden gems, but how do you make them your champion? How do you bring them onto the team? Like what are some tips you have on that for people that are starting out?
Right. I think that's a very difficult job, because
Yes.
to convince sort of good people that this is an exciting enough thing. But I think just probably I think the good part is that when you're meeting a person, you're not judging them, you're not evaluating them, so you're past that first hump, and then you're just talking about, okay, what is their long-term goal, what is their long-term plans, and talking about sort of the vision of the company, and if that resonates. So I think that makes it easier, that once you sort of cross the you're not meeting the person for evaluation, because in a meeting I think it's very difficult to evaluate a person. So it's basically you need hello, hi.
Hi Meera.
Yeah, yeah. It's very difficult. No, that's cute.
Yes. Awesome. Guys, we're gonna open it up for questions. I honestly, I have so many questions. I can just keep talking. So I'd love for you guys to share your questions in the chat, and we'll kind of pick a few up. But before that, I have one last question, which is now you're a public company. What has changed in how you operate the company?
Right. No, it's firstly amazing to finally, to cross that hump. So we started the process, I would say 2 years back. We filed the DRHP a year back, and even the whole process of the DRHP is also, from the filing of the DRHP to the approval to actually listing, it is probably like a year-long process. Yeah. But great to do that, and I think the listing is an interesting ceremony. So you get listed, and then you have the ticker, which is as soon as you get listed, the ticker starts.
Yes.
At the NSE, it's right in front of you.
Yeah.
So that is an interesting feeling that there are a lot of people there. So, I think in listed, I would say a couple of the things that it really changes. Once you get listed, is you move from being having like 30 shareholders to 30,000 shareholders. And I think that is one interesting thing, that now you have to be more responsible. Now you have to run things more responsibly as a public company. So in terms of what has changed, I think just a sense of responsibility, just because of the fact that now you have literally 30,000 shareholders. So that has probably changed. And on the business, obviously it's business as usual. So you anyways were building it for for long term. So essentially, it just continue to build it. I think being public just provides you the platform that you can continue to build it for the next 2 decades. I think that's the other interesting call that is there, that that people typically take, that once you like being public, it's not like a pause. It's like just the starting of another journey.
Yes.
And even if you look at a lot of other tech funds, they continue to be tech companies. They continue to be run by the initial team. So the thing is that once you go public, you are basically running it for another like 2 decades.
Got it. Cool. I want to talk a little bit about the questions here. I have one more question which I'll probably ask if there's more time, but there's folks that are asking the question. Pooja has a question on how did you create your network?
A network in a sense of
you said you can hire from your network, right? Like you shared. What are some tips on building a great network?
I think just working in a few companies before that is perhaps, eventually your network is essentially the college that you went into, your undergrad, your B school, and the companies that you worked with. You obviously have your school friends, you obviously have people that you know socially, but I would say that the people, your core network that you go for a lot of these, inputs are still the people that you worked with either in any of the jobs or in your school. So I think just working at one or two places before you start doing it, that's probably has proven to be handy for me, at least.
Yes, absolutely. Pranav has an interesting question. How do you manage regulation when you're in so many geographies? Is there a complication around that, or is this like something a lot of Indian companies can think of when they think about the global market?
Right. So it depends from business to business. Ideally, if you are in a space which is fairly regulated, it's I would say it's a little difficult to do that. Our space is lesser regulated in a sense that you have to work with regulators, but it is not that because your customers are not retail people, but your customers are institutional investors, which are sort of sophisticated investors. So then, that is sort of not so much applicable. So I would say, but yes, if you are in a space which is regulated, it's a little difficult to continue to launch it. And I think we took the call of not being in a very regulated business because it's just easier to launch global first.
Awesome. Adiraj has a question on what was your GTM strategy. I'm just going to extend one more point to it. Has the GTM strategy changed country to country?
Right. So in our case, so that's an interesting question. You can actually do both. So you can have some on the ground sort of more activities in the regions. Plus, you can also do global. In our case, most of the GTM strategies that we went out with were global first, but you do pilot in a few geographies and then scale it across all. For instance, if you're doing any partnership, like for instance, you're doing partnership with a local agency in some countries. So there we actually pilot with a few countries and then scale it to other countries. So I think we have done both of it. A lot of it you would typically do global, but in global, like obviously SEM and SEO is something that you can do global, but for a lot of other initiatives like partnerships that you're doing or or events that you are participating in, that has to be very local. So but the idea is that you don't restrict it to only the key geographies. You ideally you prefer the GTM strategies which you can scale globally. That is one, and then you pilot with a few countries and then see it. For instance, you can do GTM both by having a physical presence there, right? Like by having a hoarding in a particular place, or by doing a partnership with a conference which is more digital, right? So you can do both, but you would prefer the one which is more digital, which you can then roll it out in 50 different countries and pilot it in a few countries. So I think that typically works well.
Got it. Viren has a question. Obviously he enjoyed the session, but what's the thing that kept you going through tough times while building your company?
Right. So I think just having a vision of how the market will pan out going forward, I think that is something that really keeps you sort of heads down. So you're not thinking about, oh, I did this initiative. What is the instant result which is there in 1 month? But if you have a vision of how this market is on a longer term, on a 5-year horizon, right, of how this will be and whether in your hypothesis is still correct, nothing has changed. I think that is one thing that probably keeps you excited.
I have a related question to this. Like, when you were, I imagine that you had fewer tough times because you became profitable fairly early. So you didn't have sort of this, idea of growth at all cost metric optimization kind of challenge. But what are some things you let go of to become profitable?
No, that's interesting question. I think just being so I think so I think that's a good question. So probably taking a call of whether this is infrastructure which you will still have in your 10th year is one thing which probably helps you let go of some of the things which you feel will give you instant instant results. For instance, so I think in our case, I'm thinking about a good example. So yes, they can be like, for instance, like all one of the things which is always there, can I close like a $1 million account if I go and do the sales myself, right? And if the core people, 2 or 3 people are flying and doing the sales, the question is that sustainable in the 10th year? The answer is, maybe not. Maybe you can do a little bit, but maybe you cannot do that. Otherwise, you'll be like a very boutique shop. Otherwise, you cannot, you cannot do that in like 15 different countries, right? So I think that is one call that, you always have that, okay, maybe I can just do that and then I will be able to close some of the large accounts. But then you have to think, okay, maybe the right answer is, having a team and then investing in sort of training them. It'll take 3 months, maybe like 4 months or this thing, but that's the answer. So I think that is a call that, whether this is a short-term answer or it's a 10-year answer.
Was your team able to close that $1 million account without you?
I think it is so we have been able to so our ASP is slightly this thing, but we have been able to thankfully close large accounts which I would have otherwise not thought about within the corporate, and people themselves have gotten that, this is one account that we can close this one. So I was very pleasantly surprised. Initially it feels that, if you do it, you want to do everything, but then, you have to sort of invest in the infrastructure to be able to sustainably do it. And you'll be surprised at the pace at which it happens, in 1 year down the line. So 1 year down the line, it will be happening at 10 times the pace at what you could do individually.
That's a very good learning. Ishan has a question. I'm not sure what the first question actually means. Did you use account-based marketing to scale your service or product? And the second was, why do companies choose Tracxn over CB Insights or Deal Room or PitchBook? Like, what is unique about Tracxn?
Right. So yes, we do obviously account-based marketing to scale, because in our case, so in our case, I think it is it's not just a point in time, it's a very vertical solution, I would say. So I think if you're in any vertical solution, if you are providing an industry sort of a vertical software or solution, then you have to do account-based marketing. So in our case, obviously, you do map it out, you do, you do add attributes to your customers, what is there, and then, you do any sort of content or anything around it. So obviously that has to be very contextual. People like personalized, so you can only do your personalized sort of response rate or anything for, even if you're setting up a demo, that is obviously much higher. Your demo to closure rate are also higher than doing that. So I think, yes, if you're in a, especially if you're in a vertical industry, you have to do sort of account-based marketing. And I think just the second part is like the something of the sales team. So I will probably defer that.
Got it.
But you should just use the platform to be able to see that live.
I can tell you one reason why I use that over CB Insights, because I think the information gets updated more often. And number two is, I think the there's a lot more detail that is translated in layman language without metrics that you have to then make insights from. So that's why I am a power user of Tracxn, but maybe she has other reasons too.
Right. But you should check out the platform, Ishan. I think that is the easiest way to do that.
Yes. Ishan is also asking if you are hiring. He's a college student actually, and he's interested in sales and marketing.
Yeah, definitely we are hiring.
Got him. Mayur has a question on how difficult is it to manage all team members, especially since they're global, how do you do that?
So interestingly, our entire team is actually based out of India. People, like our entire, not just data building, but the entire sales also happens from India. We started off initially with having a team in US, and then we realized that the team which is selling to sort of, Europe also had the similar efficiency. So we just did that. And right now, these people actually do city trips and meet the customers. I think that is one thing that, they do, but it's all sort of, from India. Managing a team, obviously, right now, it's a little bit of a hybrid. A lot of people come to office, but some of the people are also in different cities. So I think that is something that every company has probably, has learned in the last 2 years. Obviously, a lot of people have started to coming to office, so that is great. But I think some part of your workforce will always be, across different cities. But I think that is a team you just have to learn to, work with that.
Got it. Prakhar has a question. How do you document and manage company profile pitch deck in the initial days? Do you update it regularly?
Right. So we, again, you should check out the platform, but, obviously we don't wait for the company to give you information. So actually, as investors, we used to do the same thing. We never used to wait for the company to give you information. So similarly, even in Tracxn, we don't wait for the company to give you information. We actually go out and scout the companies ourselves, and anyone who's looking at that sector, should be able to sort of reach out to the teams. So we actually don't, we actually do it proactively on the platform.
Awesome. I have 2 questions. What is the story behind the name Tracxn?
No, that's a very interesting question. So in private markets, whenever, if you talk to people, they always talk about, what is the traction? How's the traction? Please reach back to me when there's good traction. I would love to reconnect. So that's a very commonly used term in private market investors, and it's very unique to this asset class.
Yes.
So that's why when we were thinking about building a platform for the private market, this was the, obvious choice.
Nice, fantastic. And if you had to reflect back on your journey of the last 10-ish years, is there anything you would do differently?
I would say lots. You would do a lot of the learning.
Tell me top 3 things. Tell me top 3 things.
One thing is hiring your sales team much earlier. You typically delay that decision. You do the initial sales and then you hire. I think that would have probably that is one thing that I would have done differently. Second thing is I think just investing in org more. It's very it's very easy to say that I will do this also. I will work on marketing also. I'll do this also. But I think it just the second thing is just building a good sort of a team that continues to be. So obviously you've reached it, but obviously you learned it probably as you are doing that more because coming from being investors very driven IC, now you have to sort of do that. So I think that was probably differently. I think the second thing, which is use technology for your own productivity. I think that is one thing as all PMs or founders, like if your outside work life is also very sort of systematic and productive, it makes your work life also equally productive. So having all the tech tools, which you do it at the office also for your personal thing, which includes things like, okay, what's to be cooked for lunch today, that has to be automated. So you have a lot of automation even for that.
That's a great point. Awesome. Thank you, Neha. We are already 2 minutes. We already taken 2 more minutes of your time on Saturday. Really, really appreciate you spending time with us. And it's been an amazing session. It's extremely, it's an incredible story of what Tracxn has built. both in terms of, all the unicorn events that I talked about, profitability, IPO, long-term thinking, the segment it's gone after, how it's discovered the problem. But most interesting and super inspiring for me is just the quality of the product. I'm always amazed at how good Tracxn is, and it's fascinating, the breadth of customers it is now serving with the same product. So congratulations on that, and you make us proud, India product for the world. So thank you so much for stopping by, and really appreciate you taking the time. Thanks.
No, thanks so much, Mona. It was awesome to be here.
Likewise. Thank you, guys. Thanks for joining in, everyone, and thanks for the amazing questions.